Yeah, and your thoughts on the rebound we've seen in the markets today? I think I can see that we've seen gains from the likes of UAC. It was up 7%. Flour Mills up about 4.6%. First Bank up slightly, just under 2%. But clearly a good day if you consider the fact that the market has really been trending within the range.
Yeah, thank you very much, Wole. It's clearly a good day, and the movement in the market, the positive direction of the market in the last few weeks has been driven by renewed investor sentiment and optimism in the market. We've seen a lot of foreign inflows into the market. We've seen a lot of optimism from the recently released banking results and other sectors of the economy that has come into the market. That is a very good development, and we'll look forward to more of it. Yeah.
All right, so value traded was up about 12% at 2.5 billion naira. So one would say not a bad figure given where we have been over the last few weeks. Your thoughts on the liquidity we're seeing in the markets today and what you can read into that, looking at where the market is likely to end this year?
I think in terms of liquidity, not much can be said from what we are seeing in terms of the numbers coming out of the flow of the exchange. In the first half of this year, market was trading around 3.5 billion on the average per day. That hasn't changed even since the market making activities commenced on the floor of the exchange. That means that we haven't seen new monies, as it were, coming into the market. We've just seen some concentration in a few stocks, especially those that constitute the market making basket. Whether that is a negative or positive development, time will tell. But what we do know is that the fact that volume and value has not appreciated significantly still means that there is still a lot of potential for the market to go up higher in the next in the coming months. Yes.
You mentioned market making, and let's get your thoughts on, if you like, just review that process up to this point. You mentioning that we haven't seen volumes of value traded move dramatically. In fact, over the last few weeks, it has been somewhat around 2 billion or sub 2 billion naira per day in terms of value traded. So your thoughts on market making and the impact it has had compared to the impact you'll expect it to have, given the impact that the stock exchange intended for it to have?
Well, I think looking at it on the surface is a good development for the market. It gives us the confidence that the regulators are thinking in the right direction. And it has sort of brought some kind of optimism into the market. Investors are now somehow sure that when they put in their bid for some of these stocks, they will get ready value for it. But market making is two ways. There's only one side of the operation that is currently going on. The buying side, the securities lending side of the process is still not very much in place. And I think until that kicks off, we may not see the full impact of the process in the value traded in the market.
Okay, let's move on to the oil and gas space. We know on the markets right now we only list downstream petroleum marketing companies on the index. They're down about well over 30% this year, and now we're hearing that the subsidies are likely to kick in again in 2013. And some people were speculating that we'll probably see those subsidies phased out, but the president has assured over the weekend that we will still have those subsidies in place. Is this a good thing or a bad thing for the sector, given the inquiry we're seeing into the subsidies right now?
Well, good thing or bad thing, I would say yes and no. Yes, in the sense that a lot of these petroleum marketing companies that have faced liquidity constraints and working capital challenges, because we now have subsidy in place next year, means that a lot of those problems will be solved for them partially. The president has said that subsidies will be sustained, but what we don't know yet is whether the full amount of the subsidy that is currently in place would be retained next year, or whether it's a portion. He didn't clarify on that. But be that as it may, whether or not the full amount of subsidy will be in place, it means that liquidity constraints will be significantly reduced for these marketers. On the flip side, in terms of profitability, the margins of these petroleum marketing companies will still be very, very thin, because the market is still going to be regulated by the government, and profitability might not be looking very good for them in the future.
All right, let's move on to the banks. MPC decision today, clearly very significant for the banks. Widely expected that the Monetary Policy Committee will keep that rate at 12%, and it's played out just like that. Your thoughts on the attractiveness of the banking sector, given the fact that we had no surprises today?
Well, I think it was much expected that the CBN would keep the rate unchanged. If you look at the activities in the last few quarters of the year of 2012 and 2011, the focus has always been on macroeconomic stability. The banks have increased lending not significantly in the last couple of months. We do not expect that to change as we go into 2013. Banking stocks still remain very, very attractive at current pricing. Tier 1 names are still trading at around 1.2 times book value. Tier 2 banks are roughly around 0.77 times their book value. So there is still a lot of value to be gotten from banking stocks, and I think the outlook still remains positive.